In my last market cipher video, we talked about significant waves versus insignificant waves. Just to recap, I do not use anchor wave, trigger wave, because that doesn't really work out for me. So I made my own definitions, significant waves versus insignificant waves. And today I'm going to hit you with 2 more types of waves that you can look at to build real confidence behind your trades. I've been staring at Market Cipher B for 3 years straight, and I like to believe that I know a thing or two about this indicator. And so I wanted to share with you the definitions that I created that helped give me success. Every day on live stream, you hear the number 1 rule, guys. What's the number 1 rule? The thicker the money flow, the more chances of divergences. And these 2 types of waves are really going to coincide with that. So let's get started. All right, so I'm going to come on the daily time frame to really help with the definitions that we got going on here, okay? So I'm going to introduce you to 2 new types of waves. Let's start with what a spike wave is. A spike wave, defined by me, is when your momentum wave and your money flow is diverging, okay? So if you don't know what a divergence is, it is essentially where your oscillator is doing the opposite of price. In this example, we can see price is making a higher high, while your oscillator, your momentum waves here, are making a lower high, which is what a divergence is. Easy enough, we have a divergence. Now, what did we learn in a previous video? We learned that money flow is your filter to what's going to be a good trade versus a bad trade. And we learned that when following our order of operations, we are essentially trying to predict where the money will go, because money flow is king, but it just so happens to be the last order in your order of operations. So it's the hardest thing to predict, but I got your back. All right, so let's get to the definition of it. A spike wave is when your momentum wave is diverging as well as money flow. Okay, here you can see that the money flow is also diverging over time. So we don't just have the wave diverging, we got the money flow diverging over time. As you can see, money flow is making a lower low over time, while price is making a higher high, giving us a clear divergence on the daily time frame, which I'm sorry, I don't know why the hell everybody is so bullish when the daily time frame is giving us a massive spike wave here. But hey, to each their own. Now, why is it called spike wave? Well, I'll get to that in just a minute, but I want to explain to you a second type of spike wave before we get to why I named it that. Now, we already know the number 1 rule when it comes to market cipher: the thicker the money flow, the more chances of divergences. And there is an instance in which you can have a spike wave when money flow is not diverging. And that instance is when you are getting your 3 tap with very thick money flow. If you're unaware of my rule, the thicker the money flow, the more chances of divergences, it is essentially when you have very thick money flow, you can get a lot of divergences, obviously why I named it that. And you can see that it plays out here. So here we're on the daily time frame, for example. And if you go back in time to when we have the very thick money flow, you can start to expect a divergence at this point, okay? Especially when you have a red vector candle. We know that the next dot is going to be green, which means we know that we're going to be able to recover that or the red vector candle, sorry. When we fast forward a little bit and we're not getting those divergences, we should just remember the number 1 rule. Hey, Geo said the thicker the money flow, the more chances of divergences. And until you get that divergence, you really shouldn't be shorting the farm here until, bam, we finally get our divergence here in play, okay? Now, this is important. I want you to pay attention to this because this is going to change whether or not you have a significant wave or not. I always say to wait for the 3 tap when money flow is thick. But look at how this wave is higher than this wave. However, we did not diverge from here to here. So this wave does not count, okay? If you watched my last video, then you know this is an insignificant wave. We basically don't even look at it. This dot is dead to us. We don't need it. So the 3 tap rule only applies when there's a divergence. So here we have a divergence, right? From this dot to this red dot, we have our divergence. So what would the count be? The count would be 1, 2, and we would be expecting a 3rd tap with a divergence because we know money flow is relatively thick. We know the thicker the money flow, the more chances of divergences. And we know that if your momentum waves are not diverging with the money flow, then you have a chance to get your 3rd tap. And that would be a significant spike wave. Now, Geo, wouldn't this be a spike wave because money flow is coming down? Yes, it would be. And as you can see, we did result from somewhat of a decent move. We had a 10% move to the downside. I would definitely call that a spike wave. However, something you need to remember with the thicker the money flow, the more chances of divergences is you need to have a little bit of discretion with this thing. Like this is very thick money flow, okay? So you need to know, well, when money flow is this thick, did we get our 3-tap? No, we could probably still come up one more time. And although this is technically still a spike wave, we need to understand that money flow is heading on its way upwards. We have probably a cheat sheet entry here, which if you don't know is another market cipher strategy that I have on my channel. But because money flow is thick, we can expect this next green dot to set us up for the next spike wave where money flow would be more drastically coming down and we would be getting another divergence, which would be our very distinctive spike wave. Now, I just said a very important word in the explanation of this green dot. Did you catch it? Because that's the name of our next wave. Now, the second type of wave I defined is called the set wave. Why is it called the set wave? I want you guys to think about volleyball. In volleyball, each side has 3 taps. The second player will set the ball to the third player that will jump up and try to spike it down. This is why our spike wave is the wave with the money flow diverging over time, as well as the momentum waves diverging over time, because the second wave, which is this guy here, is setting the ball up to number 3 to then spike the ball down. So if you're ever confused, I want you guys to always think about volleyball. And as you can see, this spike wave played out perfectly. When we put in our top here at $49,000, this spike wave drove us all the way down 21% to $38,000. You can see very clearly we had money flow coming out of Bitcoin over time as we were putting in not only our 1, 2, 3 tap in our divergences, but on this third tap down, we have money flow coming out, we have momentum waves coming out, and everything looks great for us to spike the ball down. So now let's bring our attention to present day. We already said that this is a spike wave, right? Because we have momentum wave coming down over time. We got money flow coming out over time while putting a pretty significant high. But not only is this a spike wave because the momentum waves and the money flow are diverging, but it's also a spike wave because we have our 3 tap. Here's your 1, here's your 2, here's your 3. Here's your first divergence, here's your second divergence. So this is a double spike wave. So despite the entire world and their mother being bullish on Bitcoin, I really don't understand it because this looks bearish. I have no idea how people have the balls to long up here. So we have our 3 tap and we have our double spike wave here. And is it possible that it doesn't play out? Absolutely, because Bitcoin has been ignoring all divergences on this entire way up. I believe we are in for a much needed correction. However, again, it's not up to what I want. This is, in fact, though, by my definitions, a double spike wave. And I would not be surprised if we come down to retrace and recover this vector candle or potentially even lower. Real quick, guys, while editing, I decided we're going to call it a super spike wave. And one last thing I need to say, guys, is this second wave here, this 2 tap, does not actually need to diverge between the 2 and the 3. As long as this third wave is diverging between the top wave here, and this second wave is diverging between the top wave here, then we're all good. Would this wave be better if it was down here and we had a divergence between 2 and 3? Absolutely, it would be better. But is it necessary? No, it is not. And by the way, the bigger the divergence, the harder things fall. Now, big shouts out to the sponsor of the channel, Market Cipher, guys. If you're looking for 20% off, the link is in the description down below. Use code Trader Geo for 20% off. And of course, guys, my exchange of choice, obviously Mexi, cheapest on fees in the game. It is a free way to support me, just like hitting the like button if I've taught you anything new. If you have absolutely no idea what I was talking about in this video and everything I was saying was gibberish to you, I have a Market Cipher playlist that I will go and link right there. Go click it. If you have absolutely no idea what I was talking about in this video, I have an entire playlist on Market Cipher. I will link it right there. The box should be here somewhere. Go click it. Go click it. Go click it. All right. We're done here. We're done here.